Hello and welcome to Business Daily. It's Friday, June 23rd. Let's begin with your day's top business headlines. The list of business leaders who will join President Moon next week to the U.S. has been confirmed. Big names representing Samsung and Hyundai will be there, but also those for Korea's SMEs. Global oil prices have been nosediving. What's behind the fall and how long will it last? For more on that and other global business stories, we sit down with Eunice Kim. Korea's antitrust chairman met with top executives from the country's 4 major conglomerates in Seoul this afternoon. This is the first time in 13 years that the head of the Korea Fair Trade Commission has met with representatives of Korean conglomerates. During the 1-hour-long meeting with executives from Samsung, SK, LG, and Hyundai Motor Group, FTC Chairman Kim Sang-jo discussed President Moon's chaebol reform drive and ways to improve corporate governance and transparency. And as part of these efforts, the antitrust watchdog has been investigating 45 large companies' internal transactions among their business units since March. A team of Korean business leaders will be joining President Moon Jae-in on his first official visit to the U.S. next week. Our Kim Ji-yeon tells us more on who will be participating in the upcoming trip.
Included in the 52-person delegation to accompany President Moon Jae-in to the U.S. next week are the leaders of 10 major business groups, including the vice chairman of the country's largest automaker, Hyundai Motor, Chung Hee-sun, as well as the chairman of Korea's third largest conglomerate, SK Group, Chae Tae-won. Other notable figures include LG Group Vice Chairman Koo Bon-jun and the Vice Chairman of Samsung Electronics, Kwon Oh-hyun. And it's not just conglomerate heads that will accompany the president. The delegation will also include 37 smaller firms and 2 public enterprises that the Korea Chamber of Commerce and Industry sees as likely to be able to find fields of cooperation with the U.S.
In the past, we included as many companies as we could, but this time we tried to select those that are already doing business in the U.S. We also took into consideration the size of the companies.
The Korea Chamber of Commerce adds it expects the trip will help provide new opportunities for local SMEs in terms of exports to America. The delegation is expected to sit down with their U.S. counterparts and exchange views on a number of issues, including the potential renegotiation of the free trade agreement between the 2 countries and Korea's foreign direct investment in the U.S. Kim Ji-yeon, Business Daily.
The number of businesses in Korea was up by over 15% in 2015 compared to 5 years earlier, but their operating profits fell amid a protracted economic slump. Statistics Korea says that there were nearly 3.9 million registered Korean firms in 2015, with the wholesale and retail sectors showing the most prominent growth, while total sales of these firms expanded nearly 23% by about $859 billion. Operating profits, on the other hand, fell $9.6 billion over the cited period. Profits fell as revenue expansion was outweighed by faster growth in operating expenses, which surged 25%. Broken down by region, businesses in Sejong had the highest operating margins, while those in Seoul were the lowest. Korea's export and import volume indices rose for the 7th month in a row in May. Preliminary data released by the Bank of Korea on Friday shows the import volume jumped 9.5% on year due to a surge in machinery and electronic devices, particularly components used to produce Korea's main export items, semiconductors and displays. The export volume index rose 1.5%, and in terms of value, exports and imports both extended double-digit rises by another month in May, largely driven by climbing oil prices in the previous months. Washington has warned the World Trade Organization to make the right choice when it comes to granting China market economy status. While Beijing demands it be freed of importers' anti-dumping tariffs on Chinese goods, other members have been resisting the change. For details, we turn to Lee Ji-won.
U.S. Trade Representative Robert Lighthizer warned that granting market economy status to China will bring cataclysmic consequences for the World Trade Organization. That's what Lighthizer told Congress on Wednesday regarding China's demand that it be recognized in the WTO as a market economy against the wishes of the U.S. and the EU. He added that China's case is the most serious litigation the WTO has on its plate for now. He did not mention what measures the U.S. would take if the new status is granted to China, but simply said that he assumes the WTO will do the right thing. This comes 6 months after China filed a complaint over its market status in the WTO, which it joined in 2001 as a non-market economy. Non-market status allowed its trading partners to use a special framework to compare the prices of Chinese goods with those of third countries to determine if Chinese exports are too cheap and then impose anti-dumping measures accordingly. The terms of China joining the WTO say those conditions would expire after 15 years last December. But major WTO members, including the U.S. and the EU, have been resisting, arguing that China's market economy status is not automatic.
Many Chinese firms are state-owned enterprises, and I believe this is why the U.S. and EU are reluctant to accept China as a market economy because these companies still run according to government policies and orders. So there are concerns that trade and markets will be greatly influenced by local politics and foreign affairs issues.
The expert acknowledged that Chinese goods will likely become even cheaper with market status, but time will tell whether that would lead to drastic changes in the WTO. Lee Ji-won, Business Daily.
The Korean equity market finished the week with a strong footing. However, investors were not aggressive in adjusting in their investment portfolio. To give us a wrap-up of this week's stock market action, we're now joined by our market contributor, Choi Jin-seok. Hello, Jin-seok.
Thanks for having me.
How are things looking on the last day of the trading?
Both the Kospi and the Kosdaq market rose slightly in the last session of the week. The Kospi inched up by 0.35% to close at 2378.6, while the Kosdaq followed with a 0.85% uptick to close at 668. The Kospi market opened the session with a slight uptick, once touching 2380 in early hours. Institutions bought shares to lift the index, while foreigners unloaded shares, limiting further gains. The Kosdaq rose for the first time in 4 sessions today as well. By sector, construction, banking, pharmaceuticals, and securities performed strongly, while technology, communications, and gas and utilities performed relatively weakly. Cosmetics companies enjoyed a decent rally during today's session, as President Moon Jae-in said he will ask Chinese President Xi Jinping to stop retaliatory measures against Korea's THAAD deployment.
How did the markets do in terms of the overall performance this week?
The Korean equity market showed a mixed picture on a weekly basis. The Kospi rose slightly, while the Kosdaq fell around 1%. Although institutional investors bought shares during today's session, they were the only net sellers on the Kospi market on a weekly basis. The so-called risk appetite toward emerging markets as a whole weakened after the June FOMC meeting due to a strong dollar as well as falling oil prices. By sector, hardware, semiconductors, and communications performed strongly, while shipbuilding, distribution, and construction were sluggish. The overall picture that stood out throughout the week is that non-tech stocks performed weakly.
You've talked about a polarization between tech and non-tech stocks seen throughout the entire week. Can you tell us more on that?
Right. What's more worrisome is that polarization is not only seen in the share prices of the companies, but also in the earnings. Compared to robust Q1 earnings among Korean companies, expectations for Q2 earnings have been lowered recently. Analysts had upward revised their earnings outlook by 11% since the beginning of 2017, but the revision last month was only up 0.3%. Moreover, it seems less likely that sectors other than technology, semiconductors, banking, and gaming can beat expectations with their Q2 earnings. Other than earnings, expectations for liquidity momentum are likely to be lowered going forward too. While global central banks are leaning toward tightening than injecting liquidity into the markets, experts think cyclical sectors are expected to remain sluggish going forward.
And Asian stock markets overall showed strong performance this week, and it looks like the Chinese market got a bit of a boost from the MSCI's decision to include its A shares in the EM index.
Right. Along with the MSCI's decision, liquidity momentum gave a boost to the Shanghai market. Earlier this week, the People's Bank of China, or the PBOC, injected liquidity into markets through reverse repo measures. Authorities have been loosening requirements for IPOs in the country's stock market as well, giving another boost to a sentiment. The Shanghai Composite Index had risen by 0.8% until yesterday. However, the Shanghai market suffered losses during today's session, and it made the index go mostly flat on a weekly basis. Experts say investors decided to take profits from recent gains. Chinese authorities were found to be cracking down on companies that were pursuing M&As earlier this month as well. These factors served as negative catalysts, dragging down the Shanghai index today.
How was the weekly performance on the Japanese equity market?
The Japanese market has moved following global market factors throughout the week. Earlier this week, New York Fed President William Dudley signaled gradual interest rate hikes, showing confidence in America's economic recovery. This helped drag down the yen value, giving a boost to Japanese exporters. However, global oil prices continued to fall late this week, and this weakened the appetite toward risk assets. The Japanese market failed to climb higher by a large margin, but the Nikkei 225 index rose by about 1% on a weekly basis.
Thank you for that wrap-up today.
Thank you.
Earlier today, Kim Hyun-mi was officially sworn in as Korea's new Minister of Land, Infrastructure and Transport. On her first day in office, Kim said she will take a tougher stance on what she called excessive real estate speculation, adding that recent price growth in the property market was being fueled by speculators, not real demand from would-be homeowners. She's also referred to the June 19th statement released by the ministry, which outlined its plan to tighten mortgage regulations and more closely monitor transactions in new housing projects. Current regulations allow developers to pre-sell purchase rights on new properties even before they start construction, which are often treated as an investment tool and resold to other buyers for a profit. The prolonged drought in Korea is taking a heavy toll on the country. The continued lack of any substantial rainfall has caused reservoirs to dry up, prompting water shortages for residents and dealing a blow to the agriculture industry. Lee Eun-shin tells us more.
Yaedang Reservoir, located in Chungcheongnam-do Province, has been known as the best fishing place in Central Korea for the past 2 decades. But due to lack of rain this year, the nation's largest reservoir has dried up. Instead of floating on water, fishing boats are just standing still on cracked earth. Severe drought has destroyed the habitats of the creatures that usually dwell in the reservoir, and the lack of water for agriculture has also damaged the local farming industry.
The field where I planted rice seeds is all dried out and cracked. I'm really hoping it rains soon.
Things aren't that much different in the nation's northeast Gangwon-do province. In Hwangsong County, insects have unleashed a nightmare on the local residents. Greenery is fading away across the mountains and woodland. For a couple of weeks now, a plague of emperor moth caterpillars has been feeding on trees in the area and even plants inside greenhouses, affecting some 200 hectares. Plants attacked by these caterpillars die within a few weeks, especially in the hot, dry weather. The caterpillars have no natural predator in the region, and with the drought, their numbers have been expanding out of control.
Due to the severe lack of rain, the damage from these caterpillars has been increasing. We're doing everything we can to minimize the damage, but it's been very difficult.
As the drought has been getting worse every year, experts are concerned that the damage this year may expand beyond agriculture across the country. Lee Eun-shin, Business Daily.
Korea's population may be graying and slowing in growth, but it has also seen greater diversity over the years, with a larger number of foreigners settling down in the country. Our Lee Ju-young has the story.
Despite being known as one of the most homogenous countries in the world, Korea has seen a rapid rise in its foreign resident population. According to the Ministry of Justice, the number of foreign residents in the country recorded a total of 2.05 million in 2016, more than double the 910,000 recorded in 2006. The ratio of foreign residents has risen rapidly, accounting for about 4% of the population, up from roughly 1.9% back in 2006. In fact, with Korea only recording a population increase of 2.8 million over 10 years, the increase of 1.14 million foreign residents accounts for more than 40% of population growth. Chinese people remain the largest group, accounting for nearly half at just over 1 million. Vietnamese residents, on the other hand, were the second largest group at almost 150,000, taking over the spot long held by the U.S., with Americans totaling just over 140,000. This is the first time Vietnamese residents have outnumbered Americans. The increase has much to do with the growing number of Vietnamese women who have married into Korean households and their families that have since followed. While in the early 2000s, many Koreans tied the knot with Chinese or Filipinos, there has been a recent uptick in partners from Vietnam and Cambodia. Roughly 28% of multicultural families reside in Gyeonggi-do Province, followed by Seoul and Gyeongsangnam-do Province. Lee Ju-young, Business Daily.
Time now for a look through some of the important global business news from the week with Eunice Kim joining us in the studio. Hello.
Hi, Simon.
The crude oil prices made the news this week.
It did.
It dropped to a bear market for the first time since last summer. What's behind the fall?
Well, Simon, sentiment is dropping on the trajectory of oil prices. And although prices were seen snapping back from the week's lows, sentiment does remain fragile as more questions remain when the global oil glut will finally rebalance. Take a look. Many investors who'd been bullish on oil switched sides midweek, dropping oil futures to trade below $45 a barrel, the lowest since November. On Wednesday, Brent crude had followed WTI into bear market territory. Brent for August delivery falling 22% from its January peak, settling at $44.82, while West Texas Intermediate closed at $42.53 on the New York Mercantile Exchange, despite a shakeup at the Saudi royal family and a tropical storm headed toward a major U.S. oil terminal. Well, there is a slight rebound now. Analysts from Energy Aspect and Bank of America Merrill Lynch project prices could plummet back down to the $30 range. That would be terrible news for oil-producing countries that rely on the so-called black gold for their state revenues. But sentiment on the trading floor is falling for a reason they understand well. Rebalancing is not coming fast enough. Back in November, when OPEC states agreed on landmark production cuts, the cartel had projected the global oil glut could be resolved as early as the first half of 2017. But on Tuesday, a committee of both OPEC and non-OPEC countries conceded rebalancing likely won't be achieved until the second quarter of next year, placing it on the outer bounds of the cartel's present agreement. Though compliance has generally been good on OPEC's agreed-upon cuts, output in May did rise higher as Nigeria, Libya, and Iraq ramped up their production. Then there's U.S. shale. American producers have been adding to the global supply as more focused drilling and improved technology are helping make shale a profitable trade, even at $40 a barrel. The International Energy Agency projects U.S. crude supply could grow by nearly 5% this year and 8% next, rivaling production from lead exporter Saudi Arabia. The other potential risk? What the freshly emerged Crown Prince of Saudi Arabia, 31-year-old Mohammed bin Salman, will bring to the table. While most analysts don't see the state's oil policy changing drastically anytime soon, given the impending sale of Saudi Aramco next year, Reports say bin Salman, the world's youngest defense minister, can be unpredictable and was behind Saudi Arabia's sudden blockade of Qatar.
So another risk we'll have to look out for, a new prince and his potential moves. Moving on to Asia next, Japan's troubled tech giant Toshiba announced its preferred bidder for the sale of its chip-making unit. And it's a consortium that includes a government-backed investment fund.
That's right. It's called the Innovation Network Corporation of Japan, or INCJ. It's Tokyo's first government-backed investment fund established back in 2009. The consortium also includes players from the U.S. and Korea. Private equity firm Bain Capital and SK Hynix, which of course is a direct competitor. Now, in a statement on Wednesday, Toshiba explained its decision, saying the consortium presented the best proposal, not only in terms of valuation, but also in respect to certainty of closing, retention of employees, and maintenance of sensitive technology within Japan. Interestingly, the board decision was followed by a drop in Toshiba's stock value of 2.2%, though the cash-strapped conglomerate said it's aiming to iron out the details by June 28th, its next annual shareholders meeting. It could still be a tough road ahead. One reason is a legal challenge to the sale from its U.S. chip partner, Western Digital, which co-runs a NAND chip plant in Japan. It's arguing Toshiba's sale without its consent is a breach of their joint venture. Also, was the INCJ-led consortium the highest bidder? The Financial Times reports its deal is believed to be about $18 billion, which could be less than what others had been offering. Now, SK Hynix, the report says, is only providing loans for the consortium and will hold no equity in its rival. SK Hynix ranks 5th in global market share, 3 slots behind Toshiba, which is only outpaced by Samsung Electronics in NAND chips. And finally, a Brexit update. British Prime Minister Theresa May has offered her fellow EU leaders what she calls a fair deal for EU citizens living in Britain after Brexit. During an EU summit in Brussels on Thursday, Mrs. May said 3 million EU citizens living in the UK for 5 years will be given, quote, settled status, allowing them rights to stay and access health care, education, as well as other benefits. She said British nationals in other EU states also should receive these same rights. EU leaders said May's proposal was a good start, but there are still many questions, including the exact cutoff date for new arrivals seeking this settled status. Prime Minister May said more details will be forthcoming and could come as soon as Monday.
Just getting started for a long road ahead. Thank you for that wrap-up, Eunice.
You bet.
That wraps up for today and this week. Thank you for watching and have a good start to your weekend. Goodbye.